What's up, guys? Welcome back to the channel, Sniper Signals. Today, we're going to be taking a dive into a fundamental concept I believe every trader should master. This concept is called support and resistance levels. I believe support and resistance levels are the building blocks to successful trading, yet they often go unnoticed by new traders coming into the game, trying to find a quick way to making money, whether it be looking at things like your indicators, thinking that you might just find the holy grail to profits, or to some strategy they found off YouTube. Um, Yet they won't necessarily go into the fundamentals such as support and resistance levels and understand how the market essentially is drawn to these levels, um, and how the market will always come back to these levels to retest and kind of give some kind of direction, or kind of give a underlying sentiment, I would say, as to what it's about to do. So yeah, let's not waste any more time. Let's get right into it and see what support and resistance levels are all about. So at its core, support and resistance levels are levels where the market decides if something is too expensive or too cheap, and it will react accordingly. Okay, how can we go about this? Imagine support as a floor, right? Where the price tends to stop falling when it has been dropping or has been moving in a bearish motion. So to give you an illustration of that, we have a situation where price has been making lower lows and lower highs, and then it hits this floor, right? Hits this floor, and then what happens is that price reacts accordingly, and then it starts pushing to the upside in a bullish motion. Yeah, then we can pretty much distinguish that this over here is a support level, right? It acts as a floor where price will stop falling, it will react accordingly and start pushing to the upside. Excuse the weather, guys. It has been raining, even though it's quite a sunny day. We have been seeing some rain, and it has been quite hot for the past week. So price starts pushing to the upside and starts making high highs and high lows. Okay, so that's pretty much how the concept of support works. Okay, let's look at resistance. So conversely, resistance is a ceiling where price tends to stop rising. Okay, so let's say this is our resistance over here. This is our ceiling. And then you have a situation where price is making high highs and high lows, right? Giving us this price action, this form of price action, or this bullish price action, right? It hits the ceiling, and then it reacts accordingly and starts moving to the downside in a bearish motion, making lower highs and lower lows, like so. Okay, and then we'll start seeing that, oh, okay, price is now in a downtrend. All right, now price is moving in a motion where, as if it were selling off now. Okay, so what we see that here's our resistance level, which acts as a ceiling. Price is drawn up to this level. It reacts accordingly. You probably see some kind of consolidation happening over here, and then price starts dropping to the downside. All right, so I hope you guys pretty much understand that support is a floor where price will be dropping to, and will essentially stop dropping and start pushing to the upside, or it might go into a phase of consolidation. And then conversely, resistance is a ceiling where price will be drawn to, where it will react accordingly. It will it will also most likely go into a phase of consolidation and then start dropping to the downside. Okay, all right. So pretty simple, guys. Pretty simple. So support represents a level where buyers find value, stepping into buy when the price approaches. Resistance is where sellers may dominate, making it difficult for the price to break through. These levels are like magnets for market participants. You can spot support and resistance on any time frame, from short-term charts to longer-term ones. It's all about identifying where supply and demand have previously intersected. All right. So let's look at some real time examples to solidify these concepts. All right, guys. So right now we are looking at the New Zealand dollar to the US dollar on the weekly time frame. Okay. Now I'm gonna zoom out like this because you want to essentially see, where the high highs and where the low low, and what essentially is the price action for this currency pair. So let's do this, right? We'll do what I usually do. We'll start and see where is the highest high. So see, I believe that would be it. Okay, sorry guys. Me and my perfectionist self, and then this will be the lowest low so far. Okay, now we want to find support, valid support and resistance levels. So this is what I'm going to do. I'm going to look to the left. So let's change that color. I'm sure you guys won't be able to see. Okay, that should be better. All right, so we had a level here. This could act as our resistance because we saw price breakthrough. It interacted with the resistance level, dropped, came back, interacted with this resistance level again, dropped even further down. So we knew that at this point we were in a downtrend. And then it came, interacted with this resistance level for the third time, dropped, and then it pushed up, dropped again, came in, went into a phase of consolidation, and then pushed up to establish this new high. Okay, so we pretty much are able to distinguish that this is a quality or valid uh, level of resistance because it was interacted with quite a few times. You can even go further and see that even at this point here, it came into a phase of consolidation, it dropped, came again. So we've seen how many touches where it acted as a resistance level. So one, two, three, four, five. So five touches where it acted as a resistance level. So we know that this level here is very significant. It's very significant. You understand? So anytime price is coming to this level, we want to be very want to be very alert essentially, and see how this price interacts with it, because you can see that it's very significant. Price tends to be drawn to this level and it reacts accordingly. You understand? So that's pretty much your resistance or your ceiling. You understand? But we must take into consideration that resistance levels and support and resistance levels can switch, as you saw here, where where this level here broke, it broke, and then you would have assumed that okay, this is gonna now be a support, you see. But clearly it wasn't the case. All it did is go establish a new high, and then it broke back into this level, which then made it a resistance once again, and now we're seeing price push back down. You understand? Let's find a good support. Oh, here's one. Here's one right here. Don't have to look that far. Okay. Here we didn't get as many touches, but okay. So here we've got a support level, one, two touches. We've seen two touches on this level. Okay. Um, Giving us an idea that this could actually be a valid support or floor where price will be drawn to and will react accordingly. As you can see, we saw one, two. We're seeing this huge gap over here, which is pretty much shows that there was a lot of volatility that came in at this time, probably a market crash, and then price pushed up. So would we say this is valid? Pretty tricky, but I'll take it as I'll take it more as a demand zone. I'll take this more as a demand zone, essentially. But because we did see price come here, push back up, go into an impulsive phase where it pushed up and down, then it pushed to the upside. I guess we can make it valid. Let me not say I guess, but we can count it to say that around this zone here, where this um, support level is, we saw some reaction taking place. So we'll say fine. Here there was one, two, three touches. So we know that this level here is quite significant. So if we're going to make a a prediction, a forecast as to what was going to happen on the New Zealand US dollar on the weekly time frame, we would be able to assume that hey, maybe price is going to do something like this, push to the downside here, come around this level here, and then you might see it pushing up. Whether it goes further down or breaks up, we'll only know in future. But this is how basically support and resistance levels can be very useful when trying to distinguish where price is going, where price is going to, and how it's going to react, and giving us basically a, a foundation to stand on as to how we want to go about um, our entries or our analysis when looking at the market, um, taking support and resistance levels into consideration. All right, guys. So please do remember, support is a floor where price will be dropping to, and once it gets to that level, it will react accordingly, and it will struggle to break through. It will most likely push to the upside. Resistance, conversely, is a ceiling where price will be drawn to. Once it hits that ceiling, it will struggle to break through, and most likely it will drop to the downside. All right, or we could just find price moving in between support and resistance levels in a consolidation fashion. I understand. Do keep in mind that for a support or resistance line to be valid, we want to at least find two touches, a minimum of two touches, for us to consider that okay, this is a significant level, or this could be um, a valid support or resistance level. You understand? Then we can pretty much consider it into our analysis. All right, guys, and there you have it. Support and resistance levels are not just lines on a chart; they are the backbone to successful trading strategies. All right. If you do have any questions, please do leave please do leave them in the comments. All right. Stay tuned for more tips on how to effectively trade using these critical levels in our upcoming videos. All right. Before I go, please do like and subscribe, guys. If there's anything you liked, uh, please do share. If there's anything you didn't like, or if there's anything you're not sure about, please do leave it in the comments, and we'll get in touch with you. Yeah, that's pretty much all, guys. I'll see you again in the next video. Take care.